All right, this is the 10-column worksheet that we use to do a lot of things, to come up with adjusting entries, adjusted trial balance, income statement, balance sheet. First thing to do is you notice you got 10 columns. You got 2 for the unadjusted trial balance, 2 for the adjustments, 2 for the trial balance, adjusted trial balance. That's 6. 2 more for income statement, 2 more for balance sheet. So there's 10 columns that we're dealing with here. We're going to make the first thing you do is add the accounts over on the left. So we're going to list our accounts in order. You notice that I've got down here cash, accounts receivable, supplies, prepaid insurance, etc., all the way down. And think of Chris Clark Capital and Chris Clark Drawing as common stock, and make this dividends. And let me just go ahead and do that on all of them. Pardon me while I do it. Sorry about that. There we go. Back to the beginning. So we're going to add the accounts here. And I am actually going to go through, if I have a problem that's telling me, and I have the adjustments necessary, or the adjustment information to make the adjustments, I'm going to go ahead and put in any accounts that I don't have. For example, I may not have accumulated depreciation on my original problem, but if it says I've got depreciation expense to figure out, well, I'm going to put accumulated depreciation in, and I'm going to put depreciation expense up, and I'm going to put them in the right place. I'm going to put them, the expense down here in the expense section, and the contra asset account up here. It'll make life a lot easier in a minute. We're going to enter the unadjusted trial balance. Again, anything with a 0 balance in it, I'm going to put it in anyway. I'm going to put that guy right in there. Here's my little blurb. All listed in order. Assets, liabilities, equity, revenues, and expenses. And there they are, my trial balance balances. Do not go forward. Do not do anything else until these 2 columns balance. Nothing. Fix this first. You'll hate yourself if you don't. Then I'm going to do my adjusting entries. And just real quickly here, supplies. This is the blurb. They have a debit balance of $2,000 in the supplies account. You can see that. $2,000 unadjusted balance. Count the supplies on hand. It was $760. So the adjusting entry has to be $1,240 to get down to that. You can do the math. Debit supplies, expense, credit supplies. The next one, prepaid insurance, has a debit balance of $2,400. Represents the prepayment of insurance beginning December the 1st. And it says the insurance expense for December the 1st is $200. So this must be an annual payment. It gives us the amount of the adjustment. So we're just going to debit insurance expense, credit prepaid insurance for $200. They actually gave us the number. Unearned rent had a credit balance of $360. It represents 3 months rent. So I'm going to say 360 divided by 3 is $120 a month. Beginning with December. So we have 1 month of rent revenue, debit unearned rent, credit rent revenue for $120. Fees accrued at the end of December but not recorded, total of $500. It's going to debit accounts receivable, credit fees earned. And then wages accrued but not paid, $250. Debit wages expense, credit wages payables, $250. Depreciation expense is $50 for December, and they just give it to me, so I just put it in there. I'm going to enter the adjustments. You'll notice here that I have my line drawn above the line and below the line. Below the line is the income statement. Above the line is the balance sheet and dividends. But start out with the first adjusting entry, which was supplies, debit supplies expense down here, credit supplies up there. The second one was debit insurance expense, credit prepaid insurance. The third one was credit to rent revenue, a debit to unearned rent. D was a credit to fees earned and a debit to accounts receivable. E was a debit to wages expense and a credit to wages payable. And F was a debit to depreciation expense, a credit to accumulated depreciation dash office equipment, if you want to get technical about it. We enter the adjusted balances. Cash is not adjusted, of course. Accounts receivable, debit balance, debit adjustment, add. Supplies, debit balance, credit adjustment, subtract. And there we go. You'll never put a negative number over here, and I have never seen one switch columns. I've never seen like supplies become a credit balance. I don't know why it would. It doesn't make sense. But there we go. Do our adjusted trial balance, and each time you never go forward until the two columns you're working on balance. If these don't balance, don't go forward. Figure it out. Get it fixed. Now, once you get to here, make sure they balance. And now every error, if you find an error on here, it's going to be on this page. It will not be anywhere else because you've corrected them right here on these two columns, these two sets of columns. Always balance your columns before you move forward. Do not skip this step. Okay? Now I have my unadjusted balance. My adjusted trial balance. I'm going to prepare the income statement. All I have to do is bring these two columns over here into this section. So there you are. I've got my income statement here. I'm going to add one more line down here and call this net income. And I'm going to add up my revenues. I'm going to add up my expenses. And whatever the difference is, I'm going to put below it. And I'm going to put it in the column that needs more money so they'll balance. So I'm just going to add it to the expense column. This shows me that my revenues are greater than my expenses, so this represents a net income. There you go. They total, they balance, we're good to go. Now I'm going to do my balance sheet. And I'm just going to bring everything in this up above the line over, including dividends. That's just the way it works right now. We haven't closed the dividends account, but we have to stick it in there. Just know that the closing entries are coming. So here we have our net income, and we're moving it over into the credit column because income would be a credit. Revenues greater than expenses, so the credit side would be greater than the dividends, than the debit side. If it were the other way around, if the revenues were less than the expenses, then we would end up with a debit number over here. But anyway, we put net income over here in the credit column, add it to our totals, and they balance. We are good to go. And that is the way the 10-column worksheet works. This is such a great tool. This is such a great tool. The closing entries you can make from this sheet right here. You're gonna debit revenues, each one. You debited fees earned, debit rent revenue for their amounts. We're going to credit income summary for the total, $16,690. We're going to credit wages expense, supplies expense, rent expense, utilities expense, insurance expense, depreciation expense, and miscellaneous expense for their balances. And we're going to debit income summary for the total. You know income summary is going to come before all those because in a journal entry you put the debits first. And then income summary will have this balance. That will be the balance in income summary, 7105. It will be a credit balance in income summary. I will debit income summary for the amount of net income for that balance, and I will credit retained earnings. We don't have a retained earnings account up here because it's a new company, and I should have put it in there. But there it is. We'll debit income summary and credit retained earnings for that amount. Income summary will go back to sleep with zero balance, and then we will credit dividends and debit income summary for the $4,000, and that will leave us with the amount of earnings that we earned and then retained earnings. All right, that is the 10-column worksheet.